Well, as you may know, Anthony is on holiday, so I'm back in the chair for this week, and there are a bit of a range of different hosts over the next couple of weeks, so that'll be a bit of fun while he's away. And if you're looking to buy over the next couple of weeks, my guest in the studio live with me will be talking finance, so don't miss that. And now on our inside story, we're going to have a look at the property cycles.
Whether you're buying real estate for a bargain or selling your home for a profit, the value of residential property follows a cycle where history shows there is 7 to 10 years between peaks. According to financial commentator David Koch, the 4 phases within a cycle are the opportunity phase, which is at the beginning of the cycle and is the best time to buy. The growth phase, where investors become more confident as values start to rise. The peak phase, where property prices have spiked and buyers are generally inexperienced and timid investors. And finally, the correction phase, where buyers overextend and banks tighten credit. Property experts from SQM Research believe capital cities across Australia are currently recovering from a 2-year downturn where residential prices dropped 3 to 10%. This means we are reaching the end of the opportunity phase, and it's predicted we'll see modest recovery throughout the rest of the year. However, those in the market should also be aware of external factors which can affect individual properties and place them in a different point in the cycle. These influences include new infrastructure, property condition, population growth, consumer confidence, and interest rates.
Well, some interesting thoughts there on how the property cycles do run. Certainly the feeling at the moment is that the pendulum is just lifting off the bottom, and residentially speaking anyway, we're heading towards a little bit of growth and certainly a lot more stability in the market, which is great. Joining me now in the studio is Toby Stapleton, and Toby of course is Head of Funding Options. Joining me now, Toby.
Thanks, Tim.
How you going?
Good to be here. Yeah, very well, thank you.
Good. Now, you've been here before, so you're an old hand at all of this. But let's get things started by, perhaps for those who might not have seen you last time, what is Funding Options?
Yeah, sure. Well, Funding Options is a mortgage broking business, Tim, as you know. We've got a referral alliance with the team at Toop. So I sit in the Norwood office, talk to the team and look after the finance for their clients. And
how can people get in touch with you?
Well, quite simply, I suppose the best way is via phone, and office phone number is 8366 0822.
Yep.
Or they can look at our website, which is fundingoptions.com.au, and get in touch via that as well.
Okay, and there is another option, of course, there. If they're wandering through an open inspection, any of the salespeople ought to be able to tick a box on their iPad and send you a note and let you know that you need to give them a buzz.
Absolutely, yeah. With all the new technology the team at Toop has, we've got the facility there for the agents to just press a button and the details come through to me.
All right.
And away we go.
Good work. So as we sit at the moment, the mortgage or the Reserve Bank and the banks in general, it's been an interesting space over the last couple of years. How are you finding things just in the last month or two?
Yeah, well, I mean, there's certainly been some very positive indications in the market, both on the property side and the finance side. So from my point of view, it's great because the banks are keen to lend.
Right.
You know, things like fixed rates, you would have heard a lot of people talking about cheap fixed rates the banks are offering. They're out there, they've loosened some of their credit policies, so it's a really good time to look at your financial situation and see what you can do.
What, ideally for those who'd be watching right now, what would you be locking your interest rates in at the moment in a general sense? What rates can you get?
Well, at the moment, as sort of mentioned, there's been a shift towards those fixed rates because of the cheaper sort of options out there. So I personally have had a lot of clients that want to at least take advantage of some of the fixed rates.
Yep.
We've seen as low as 4.79, 4.99 for a couple of years fixed, which is really cheap.
Yep.
And so people may look at their situation, and everyone's obviously different, and they may choose to fix a part of their loan or all of their loan. Really, it just suits whatever their sort of goals are, because obviously with fixed rates, there are a few more restrictions, so you don't want to be taking a fixed rate and then to break that in the term of the fixed rate.
Okay. So what's our standard variable at the moment, or there
approximately? Well, your discounted standard variable, you're looking at probably a range somewhere between 5.5 to 5.7 is pretty much the average. So somewhere around that, if you're in that range, you're doing quite well.
So you can potentially get 0.75% less
Absolutely.
for locking in. That's pretty handy.
Yeah.
Any movement in sight near future? Obviously, often the banks start to play with those fixed rates when they think things are about to change. Anything happening there?
Well, I suppose it's difficult to gauge. I mean, the fixed rates are, I suppose, a bit of an indicator of future rates, but it's difficult to predict what's going to happen in the next 6 months, let alone 2 or 3 years.
Yeah.
You suggest that variable rates normally move with the market, and as things improve, the rates would lift slightly. So I'd suggest at the moment, for the time being, my thoughts are that rates will probably stay quite stable where they are.
Okay.
Yeah.
Which is probably good for the market in general, because people feel as though they can get in and buy property and do what they want to do without feeling like I have to take into account some other aspect. Yeah,
absolutely. And I mean, fixed or variable at the moment, it's still pretty cheap rates. So for people looking for property or looking at their existing stuff, it's a really good time to see where you're at. And rates haven't been this cheap, I suppose, on average for quite some time.
So if you're a home buyer or an intending home buyer out there at the moment, what sort of facilities have you got available for them to perhaps do a little bit of homework, and how best are they getting them sorted so that they can move in and make an offer on the property they find?
Yeah, well, I mean, that's probably the most important point at the moment, because some of the major banks, or some of the banks in general, have been a little bit slow, and due to these fixed rates and their turnaround times going a little bit slower.
Yep.
So it's therefore much more important to be prepared, and there's a few ways we can do that. You may have heard the terms pre-approval.
Yes.
Whereby we can essentially have a loan assessed and approved to the point where the client can go in and buy a property, and that's their only sort of final condition.
Right.
So therefore you can have a pre-approval, you're prepared to go in and negotiate on properties, to go to auctions and be ready. You can know what your limits are. So sometimes you might be surprised that the bank can offer you that much or that little than what you thought. So you're prepared, you're ready to go. That box is ticked, which is fairly important finance for a property purchase.
Definitely.
And it saves you a bit of time, because we are finding too that because of these turnaround times, people are having to chase their finance right up until settlement date. So it's good to be prepared.
And how many people are you finding at the moment are doing this? Because certainly from my point of view, we still come across a lot of people who wouldn't have even thought about how they're going to get hold of money, but they're out looking at houses.
Yeah, I suppose it's a mix of people who are ready to go.
Yep.
And then there's the other ones that have started looking. And so I discuss pre-approval with them. And it's surprising that once that pre-approval is in the process, that they're ready to go, then their mindset is that I want to find a property now. And so generally they do try and find something quickly. So I think more and more people are educated now that they do need to be prepared with the pre-approvals and stuff like that. And that helps. So I'm finding pretty high percentage that I'm looking at the pre-approval.
And now you've got some tools on the website that might help people if they're just wanting to get a bit of a feel on what they can do?
Yeah, definitely. As a starting guide, if you have a look at fundingoptions.com.au, there's, at the moment we've got 3 calculators on the website, which is your borrowing capacity, so you can see how much you can borrow in a very general sense. Secondly, a stamp duty calculator. And thirdly and importantly, a loan repayment calculator, so you know what potential repayments you're making. Okay,
so there's a little bit of homework that can be done before.
Yeah.
One other thing, I guess, for first home buyers, do you help them through the process of getting their grants and all that sort of thing in place?
Yeah, certainly. I mean, there's a raft of different issues and possibilities for anyone, but especially first home buyers who've perhaps had no experience in seeking finance for property. So the first home buyer grant is one of those, and yes, we do. The banks process that on your behalf, so we can look after that up front. And so you just have to look forward to settlement day and not have to worry about all those sort of things.
Well, I guess another big advantage for a first home buyer then to be speaking to someone like yourself and getting organised so that they don't have to worry about all that sort of business as well.
Absolutely.
Who else should be talking to you?
Well, anyone really, because I suppose on one half of mortgage broking you're looking at purchases and investment purchases, first home buyers and those sorts of things. But increasingly we're getting people wanting to review their situation. So we're looking at refinances and restructuring, whereby we can have a quick look at your situation. Obligation free, there's no cost at all to the client, and we can make sure that you're getting the best deal possible. And if you're not, we can potentially save you, in a lot of cases recently, thousands of dollars per year just by reviewing their situation and restructuring.
Excellent. Yeah. All right. Well, Toby, hang on. We're going to go and have a look at our Going, Gone segment.